Joining me now is Greg Faranello, Executive Director and Head of U.S. Rates at AmeriVet Securities. Greg, welcome to the New York Stock Exchange.
Good to see you, Ashley.
All right, so the session just kicked off. What are you going to be looking at most closely today?
Well, first of all, women in financial markets is completely important. And I'm so happy with the progress that we've made over time with that. In terms of financial markets, I still think we're looking at the Middle East. I mean, that is really what it comes down to. The markets have been extremely volatile. I think the news flow has been extremely volatile. We have central banks around the world that are pricing in rate hikes now around this. The Fed has been priced out for 2026 to come down in 2027, but we still see volatility ahead.
Major averages coming off of 5 straight weeks of losses. Do you think things are going to get worse before they get better?
I think they could. And look, I am an optimistic person in general. And I think if you're a long-term investor, you want to stay invested. Certain sectors have been beaten up a little bit more than others. Having said that, if you look at the charts, you look at the broader indices, you know, we've broken through some levels here, and there certainly could be some downside ahead, but that doesn't mean you have to capitulate and get out. I think ultimately these will be buying opportunities. If you look at last year at this time, if you look at April, you look at the drawdown, I mean, we could certainly go down more in terms of the averages, but ultimately I think that will be a good buying opportunity.
Why do you think buying the dip is a good opportunity?
Well, it depends where you buy the dip, right? So right now, we're in the thick and weeds of things. So you need to pay attention, you know, depending on what you own, depending on what the index is. But I ultimately think buying the dip is a good opportunity because I think the economy is still in pretty good shape in general.
That's right. You are pretty constructive on the economy. What is your outlook for the next year for the economy?
I think the economy is going to be fine. I mean, and it depends a little bit, right? I mean, if you look at energy prices in general, if we continue to stay at these levels, if we continue to move up, we could hit a recession at some point. I think it will be a shallow recession, but energy prices are going to play a factor here. There's no question about it. I mean, I got my home heating bill a week ago. I was in the 4s, now I'm in the 6s, right? So people are going to feel this pinch. There's no question about it. You're going to see the inflation numbers tick up in the coming months, and you're likely going to see the growth numbers come down. So we're going to have to wash that out. But ultimately, I think the policies that are in place, I believe in the president, I believe in his policies, and I think we're going to be okay, but we may need a little bit more time here.
And I understand, as you just mentioned, inflation, you think it may stay elevated. How much do you think it can climb?
So we could certainly climb into the 4s on a headline, I think. You know, in terms of core, where they strip stuff out, but the headline inflation numbers are certainly they're gonna creep up here. There's no question about it over the next couple of months, and people are gonna feel the pinch. I mean, the general consumer is going to feel the pinch from this. I think the president is aware, and we'll see where it goes. You look at energy prices this morning, we're moving even higher. So there's some things that can be done. There's some things that can't be done. But I think ultimately this comes out of growth. It's an inflationary pinch, but it's ultimately, I think, a growth story for consumers.
And Fed Chair Jerome Powell and New York Fed President John Williams will speak today. What do you think investors are going to be listening for most closely?
I think the Fed's on hold here. There's no question about it. I mean, if you listen to every Fed official, and I can't really blame them from being on hold here. I mean, they're balancing growth, they're balancing inflation. They're going to tell you that they're on hold. And if anything, we're pricing, if you look at the forward curve, we're pricing in slight rate hikes in 2026 from the Fed. I don't think rate hikes, personally, I don't think that's the answer for any central bank around the world, because I think the higher energy prices will ultimately come out of growth. I think if central banks start to hike rates on top of that, we're going to move into a recessionary environment.
How do you think a rate hike could impact the everyday American?
Well, rate hikes right now, I mean, I think we should have rate cuts, personally. I mean, that's my view. But rate hikes, the everyday American right now, I mean, I think in particular in the U.S., we need a lower rate structure, not a higher rate structure. If we start to hike rates on top of this, it's going to make things even worse, in my view. It's not going to bring... If you look at the dynamics of why energy prices are moving higher right now, it's so far away from central bank policy. So if central banks start to hike in this environment, they're going to make things even worse than what's coming, which are higher energy prices.
All right, Greg Faranello, Executive Director and Head of U.S. Rates at AmeriVet Securities. Thank you so much for joining us at the New York Stock Exchange.
Great to see you, Ashley.
Great to see you.